What if the biggest mistake most investors make isn't losing money, but missing the opportunity to change their financial future simply because they didn't stay long enough? 5 years from now, some companies will look completely unrecognizable compared to today. Not because they were hyped, not because everyone was talking about them, but because the technology, the demand, and the timing quietly aligned in the background. Welcome back to Stockora, the place where we talk about what's coming next, not what already happened. Before we dive in, take 1 second and subscribe to the channel. If you care about long-term wealth, future technologies, and stocks that most people only notice too late, you're exactly where you should be. Subscribing helps this channel grow, and it helps you stay ahead of the crowd. Today's video is not about safe plays. It's about possibility. We're breaking down 10 stocks that could potentially 10x before 2030. These are early, volatile, and risky names. Some will fail, some will disappoint, but a few could completely redefine their industries and their valuations. We're starting slow and building momentum, so stay with me until the end. The most powerful ideas always come later. The first company we're talking about is Zeta Global. At first glance, this may not look exciting. It's not a flashy consumer brand. You don't hear people talking about it at parties. But Zeta operates in one of the most important areas of modern business: understanding customers. Zeta helps large brands collect data across email, websites, mobile apps, and digital platforms, and then turn that data into real-time action. This is where artificial intelligence actually turns into money. Personalization at scale is no longer optional for large companies. It's survival. What makes Zeta interesting is that it already works with enterprise clients. This isn't an idea stage company. Institutions own a large portion of the stock, which signals long-term belief. The stock itself hasn't moved dramatically, and that's exactly why it's interesting. If Zeta becomes a core operating layer for major brands, today's valuation could look tiny 5 years from now. Now let's talk about a company that completely reinvented itself: iron. Iron started in Bitcoin mining, but today it's focused on something far more valuable: energy-efficient data centers. AI doesn't run on ideas, it runs on power, and power is quickly becoming the biggest constraint in the AI revolution. Iron builds data centers in locations where energy is cheap, abundant, and scalable. That's not a small detail. It's the entire thesis. As demand from hyperscalers and AI companies grows, those who control infrastructure and energy win. The stock has already moved aggressively, but analysts believe this is still early. Earnings have been volatile, and short-term moves can be brutal, but over the next 5 years, energy-first data center companies could see massive re-ratings. Now shift your focus to energy storage. Not phones, not cars, the power grid itself. EOS Energy builds massive grid-scale batteries designed to stabilize electricity systems. As renewable energy expands, the grid becomes less predictable. Long-duration energy storage is the missing piece. EOS operates in a space that doesn't explode overnight, but when adoption starts, it scales fast. Yes, the stock is volatile. Yes, price targets are scattered. But infrastructure plays don't move linearly. If utilities adopt this technology at scale, the growth could surprise almost everyone. If you're still watching right now, comment long-term below. It helps the video, and it tells me you're not here for quick hype. Now let's talk about artificial intelligence, but not screens and keyboards. SoundHound AI focuses on voice. Voice is one of the most natural ways humans interact with technology, yet it remains one of the least monetized. SoundHound's technology is embedded directly into cars, restaurants, and real-world devices. Adoption has been slow. The stock has been painful to hold. But revolutions don't happen all at once. If voice becomes a standard interface for AI in the real world, companies like SoundHound could look very different by the end of the decade. Now we move into materials, the foundation of modern technology. USA Rare Earth operates in one of the most geopolitically important spaces in the world. Rare earth materials are essential for defense systems, electric vehicles, and advanced electronics. Right now, the United States depends heavily on foreign supply. That's not sustainable long term. This company is early, extremely early. There will be speculation, sharp swings, and uncertainty. But if domestic supply chains become a national priority, the upside here could be massive over a 5-year horizon. Now let's talk about batteries, the silent engine behind modern life. Enovix is working on next-generation lithium-ion battery designs focused on higher energy density. This matters more than people realize. Better batteries don't just improve one product, they improve entire industries. From wearables to electric vehicles, from defense to consumer electronics, energy density changes what's possible. Enovix is still pre-profit, and the stock reflects that risk. It's volatile and often ignored. But if this technology scales successfully, valuation expansion could be dramatic over the next 5 years. Next, we enter one of the most speculative, but potentially transformative, areas in technology: quantum computing. IonQ focuses on trapped ion quantum systems and already has real partnerships and early commercial traction. Quantum computing won't replace traditional computing tomorrow, but when it works, it solves problems that are impossible today. The stock moves heavily on sentiment, news, and sector hype. But long-term investors aren't focused on next quarter. They're focused on what happens when the technology crosses a critical threshold. Now, let's talk about space. Rocket Lab is no longer just a concept or a dream. It's a revenue-generating space company. As access to space expands, reliable mid-market launch providers become incredibly valuable. Rocket Lab already has demand, backlog, and growing credibility. Yes, the stock has already moved, but space infrastructure is still in its early innings. If launches, satellites, and space systems continue scaling, Rocket Lab could become far larger than most people expect today. Now we turn to power, specifically nuclear power, reimagined. NuScale Power and Oklo are designing small modular nuclear reactors. These aren't massive traditional plants. They're smaller, safer, and more flexible, designed for a world where energy demand keeps rising. AI, data centers, and digital infrastructure need consistent, reliable power. If even one of these companies successfully deploys a scalable reactor, demand could explode. Execution is everything here. But the reward for success could be enormous. And now, the number one stock on this list, a company trying to connect cell phones directly to satellites anywhere on Earth. No towers, no dead zones, no infrastructure limits. AST SpaceMobile is not just a telecom story. It's a global connectivity story. The stock has already surged and remains extremely volatile. Buying at the wrong time can be painful. But if this technology works at scale, the value created over the next 5 years could be massive. Imagine having coverage in places where it never existed before. That's the vision, and that's why this company sits at the top of this list. Before you go, remember, these are not guarantees. They are ideas. High risk, high volatility, high potential. If this video gave you value, subscribe to Stockora, like the video, and share it with someone who thinks long-term. And comment below, which stock do you believe truly has 10x potential before 2030? Thanks for watching. See you in the next one. There will be speculation, sharp swings, and uncertainty, but if domestic supply chains become a national priority, the upside here could be massive over a 5-year horizon.